Good afternoon once again. So today we are going to cover about the e-invoicing. There has been certain changes which has come in recently in terms of the guidelines which has been issued by the tax authorities and certain key aspects from those guidelines. We will try to elaborate which we have been doing in the past. Some of the webinars we have done, about the background and what are the key aspects of it. But today, primarily focusing on the sector specific and certain deep dive on the scenarios which would be applicable on the invoicing. That primarily we are going to talk about it. So thank you for all joining in today. I know this is a certain uncertain times which we have, but yes, government is keeping us quite well, safe. So hope everyone is safe and sound in wherever they are. So today, with we have with us, I'm Manish Saraf. Just to give introduction, I'm Manish Saraf. I'm chartered accountant into this profession of audit and tax advisory for last 23 years. Previously worked with PwC Deloitte, and with me is Prakati and Bhakti. So Prakati is director with us, he has the experience of 13 years in the international taxation and the systems and the process, and currently working on the invoicing where we have started with our client. And similarly, Bhakti carries an experience of 10 years. He was working with Deloitte, and she has 10 years experience in the VAT indirect taxation and been part of the team of implementing e-invoicing with her previous organization and also supporting in the UAE with us. So as we mentioned that, we will quickly brush up on the structure, the framework of five corner model, which you might have seen it, but specifically highlighting certain key aspect of it. And in terms of the data field, the data mapping, which becomes a crucial for the invoicing structure perspective, what are those scenarios in your businesses on different sector specific details would be required. And then what kind of challenges we see and what should be the roadmap, as we see the time is approaching now, being the first deadline for 31st July for ASP appointment this 2026. So what you need to do before we start up, identifying your ASP. So just to give a quick intro about SNB Consulting, we have been in the UAE region for last 7 years, and we have a team who has primarily good experience, worked with the Big Four Consulting and a large organization, and specializing in the tax jurisdiction where we have been doing a lot of VAT assessment, assignment, and transfer pricing, and we do a lot of technology enhancement or support or transformation projects with our client. And with that, we have also started working on the e-invoicing. And to support in this, we have a pre-approved ASP with us is Taxila, with whom we have partnered for this solution. And they have been providing for last 10 years on the e-invoicing platform, and they have worked upon the PayPal system across different jurisdictions. They have presence in 25 countries, and they have also worked in KSA, the Saudi, for the invoicing implementation. And then they are ISO certified and goods hands on the implementation wherever the PayPal system has been in place. So to take it further, I will hand over this to Prakati. I'll invite Prakati to talk about the framework of the invoicing structure in the UAE.
Sure. Thank you so much, Manish, for this uh, opportunity. And this webinar, we will take you through the recent guideline that has been released by the Ministry of Finance, clarifying various aspects of e-invoicing. So the world or the life may be certain or not certain, but ministry is taking each small step to clarify what goes in invoicing for all the business as well as for the ASPs.
Just to
So
add on,
if
Prakati,
this,
maybe just to announce everyone, please make a note. Whatever queries you have, please put in the chat box, because the whole purpose of this webinar is that we address your queries, whatever you come across in your businesses, and we at the end of the session we'll have a Q&A session, and we will discuss about those queries, whatever you put in the chat box. Thank you. Back to you.
And we are sure that the queries might be coming from the obstacles or the challenges that you might be facing today in while you are looking more into the e-invoicing implementation. So happy to address them. So, as of now, there are a host of regulation and guidance that has been released by the ministry in association with the Federal Tax Authority to bring invoicing as a mandate, as well as clarifying the positions wherever the business had challenge understanding the applicability. So, if we have a look around this table, there were MD 243 and 244, which was released in the end of September 2025, which clarified, which brought the e-invoicing mandate to the UAE. It also provided the applicability of e-invoicing in the phases in which it needs to be applied, the timelines, so on and so forth. Then comes the Cabinet Decision 106, which came later in November 2025 and provided the administrative penalty wherever the e invoicing is not complied with. Now, this goes on the ASP as well as on the business. The next is the changes in the VAT decree law. So, although e-invoicing is a mandate that has come up from Ministry of Finance, FTA plays a role in terms of operational aspect of it. And there are changes made in the VAT decree law in terms of definitions from that ranges from for e-invoicing. The e-invoicing follows a PINT-A data dictionary, which has again been released somewhere around February 2025. And then there are certain guidelines around e-invoicing, guidance on the selection of the ASPs, as well as guidance on the mandatory fields that are required to be mentioned in an invoice are released recently in February 2026. Apart from all of this, the FTA and the ministry are releasing FAQs on their website and also conducting webinars and awareness session on a time to time basis so that they can support the businesses to get acquainted with the knowledge and clarify if there are any doubts. So it is important that the business track all of these guidance and regulations in place and accordingly go about completing the mandate. So e-invoice, someone could understand, is as a digital invoice. There are accounting systems currently where the invoice are issued digitally as well. Then how does an e-invoicing differ from that? To answer that, e-invoicing brings up a network whereby the invoice is transmitted from the seller to the buyer in a secure format, in a standardized form, and without any chances of tampering with the data in the invoice. At the same time, this invoice is available to the Federal Tax Authority on a real time basis. So what they can do is any kind of analysis to and also to map it with the other tax records that they have with them. So PINT-A specification comes from a global PINT specification from the PIPOL authority, and PINT-A is specific format for the UAE invoicing mandate. It is basically a data dictionary where all the mandatory optional data fields that are required to be mentioned in the e-invoice is required. It also has categories of invoices that can be raised, and each category of invoice, say export invoice or a standard invoice or a tax or commercial invoice, the data fields in each of these would differ. So it is important to understand the PINT AE specification is different for each type of invoices. Then the other terms are PIPOL ID. So PIPOL ID is a digital address to your business. Currently, you can say that you are located in JAVSA. However, the people ID tells you, gives you a digital address for your business. So, what happens in a VAT group? The VAT group may have different member entities. However, people ID will be different and very unique digital address for each of those different entities. And this is very important and for sharing and receiving of the e-invoicing. Then comes clarification on the data accessibility. So there was a disguise that the data needs to be stored in the UAE itself. However, now it is clarified that the data can be stored within UAE or outside UAE. However, the accessibility for the FTA to retrieve them and to have a hold on them should be there. So, irrespective of the storage where it is stored of the invoice and the associated data, it is important that FTA is readily able to access the same. In terms of the period of retention, so it goes hand in hand with the law for the VAT, but the corporate tax law also needs to be factored for storage of your data. So, e invoicing is with respect to the retention of invoice data, the credit notes, and the associated data, which helps us to bring the invoice in place. And it has been clarified that the data needs to be retained for up to 5 years for all businesses and up to 7 years for specific industry, which is into real estate. Then is the UUID, which is again a unique term, which you will hear more than often. So any invoice will have a universally unique identifier so that any invoice cannot be tampered with, and whenever the FTA is analyzing, there is no duplication of the invoicing. And the very important part in the whole invoicing is, unlike other countries, UAE is adopting a PayPal network for the transmission of their invoices, and hence appointment of an accredited service provider is very important. As on date, there are around 20 pre-approved ASPs which are listed by the Ministry of Finance. This PayPal network provides a decentralized continuous transaction control method of generating and exchanging the invoices. So there are various parties to this invoice transmission, which includes your buyer and seller, which is same as it used to be in a pre-invoicing era. The new parties added to it are the ASPs of the seller, ASP of the buyer, as well as the FTA, which is there to collect, validate, and retrieve the tax related data. So, in a standard invoice format, if the business is or a supplier is sending an invoice, it needs to have the mandate to comply with the standard and the optional data fields requirement as per the data dictionary, which is the PINT-A format in the UAE, and then it goes to the ASP of the supplier, which helps to transmit the invoice data from a regular invoice to an XML machine readable format. There are many fields in the mandatory and optional fields based on the user type or the invoice type, but all fields probably may not be available on the face of a physical invoice, but when it is transmitted on a machine readable language, it is very much there. The other clarification that has been brought by the ministry in this guideline is that while you are a supplier of goods, you're also receiving certain services or goods. In that case, you need to have only one ASP for both your AR and the AP processes. You cannot have two different ASPs. Then the from the buyers from the sellers ASP, the tax data goes to the FTA. It also matches with the ASP of the buyer through the open PeopleSoft directory. It matches the PeopleSoft ID, and then the data goes from the buyer's ASP to the receiver's endpoint. So all of this process in which you will probably see only the parties that were available as on date, which is the supply for the supplier, it will be buyer. But behind the scene, there will be the ASPs of the buyer and the seller working behind. And now the FTA is there to retrieve to see the tax related data on a real time basis. This data is available to them and you can be used for any analysis with them. There could be scenarios where invoice is not touching all the five corners or endpoints as I mentioned in the last slide. For example, in case of export of goods, there are businesses who come and question that why, if I am exporting, how is it applicable to me? However, export of invoice is, of course, one of the user case or invoice type, which is in the scope of invoicing. The only difference it makes is that from the uh, system or the accounting system of the supplier, the invoices are sent to their respective ASPs and it goes to the corner 5, which is FTA. And the invoice is delivered to the foreign buyer in the regular format, which is either in email or PDF or any other mechanism that the business uses. This is specific to a case where the buyer is from a country where there is no PayPal network. It may or may not be on the e-invoicing model. So a country like Saudi Arabia, which is on e-invoicing, however, there is no PayPal network where the e-invoicing goes, then there is no need to share the same or to have to go so that the invoice touches the corner 3 or the corner 4 in this situation. The another scenario in export of goods could be where a company which is a buyer is in a country where there is a PayPal network. For example, Germany. If the buyer is from Germany and the buyer is using invoicing on the PayPal network, in that case, the invoice will go to the corner 4, which is the ASP of the buyer, and it will reach to the customer using that. However, the only change is that it need not to have, uh, yeah. So all of this will happen, and it will go on the same form. But the next is in case of import of goods. So imagine a situation where you are receiving goods from a country outside the UAE. In that case, it is not mandatorily required to have your e-invoicing. So even when currently the invoice are directly received, it it will go on the same basis. And for the custom declaration and the VAT accounting, the recipient of invoice in the UAE needs to comply from such for such mandates. There are so many parties in the e-invoicing. There are the business and the government entities, which are the actual users on which the mandate is required. Then there is ASP, which is the technology service providers and intermediaries through which the invoicing will happen, which is because the e-invoicing, which is in XML format, can only be read by a machine, and the ASP will provide the technology through which the invoice can be passed and transmitted. Then there are Ministry of Finance, which is the policy maker. So it is a mandate which has come from ministry. And the Federal Tax Authority is the operational platform on which for example, the appointment of ASP happens, from which the identification of the tin or generation of tin can happen. The next is the PIPOL, which is the Pan European Authority, which provides a network. It also provides various security criterias where the ASP has to pass through all those criterias to become a PIPOL certified user. And the ASP also has to certify the requirements of the ministry to become an ASP. So, as I mentioned, there are 20 which is in the list right now, and there are more to come in future. In terms of the applicability, as we understand that e-invoicing is applicable where the business is issuing invoices to another business or to the government. So currently, any invoice that is raised on a customer where there is no or a TRN used to raise the invoice, in that case, the applicability for routing it through the PayPal network and using the ASP does not arises. However, the scope of the invoicing is very broad. It is not specific to company which is either VAT registered. So irrespective of whether or not it is VAT registered business, whether or not it has a place of establishment or a fixed place of business in the UAE, whether it is a free zone or a mainland, whether it is an exempt or out of scope supply, irrespective of all these criteria, the e-invoicing is still applicable. So, what needs to be ensured to say that whether it is applicable to you is number one, the entity should be conducting a business in the UAE. That is the first criteria to see the applicability. Next comes the threshold, where if the business is having a revenue of more than 50 million, the threshold for applicability or the last date as the guideline mentions now is the ASP appointment has to be done on or before 31st of July 2026. If the ASP, the list of ASP all are approved, you can do it before the 31st July 2026 as well. And with the guidance on the selection of the ASP, you can go through and understand what enables you to select an ASP vis-a-vis your business. And the e-invoicing for business, which is having revenue of more than 50 million, starts from 1st January 2027. However, if you start before this date as well, you're allowed to do that. There is no foundation in terms of you going live before this date. Similarly, for all other businesses, the mandate shifts to 6 months down the line, where the appointment date is 31st March and the mandate to start raising an e-invoicing is 1st July 27. Then there are government entities for which there are other timelines. Now the question comes in terms of what is a revenue? Whether in a VAT group, should I look at the revenue of the VAT group as a whole? Because I consider business and this is my top line. The clarification in the guideline specifies that the revenue is the gross income which you show in your income statement. It should pertain to your most recent accounting period. So, for example, if the mandate starts from 2027, the recent accounting period would be ideally 2026 if you are following the calendar year. And these financials, which pertains to your accounting period, should be in accordance with the applicable legislation in the UAE. And in case you may say that the financials are not available or either not audited, in that case, you have to go through what are the federal tax authorities documentation applicable and accordingly identify the revenue. In case of a VAT group, the revenue of each of the entity or a group member in the VAT will have to be seen for applicability. Beyond that, there are voluntary steps as well. This comes as a soft mandate from the government. So if you want to start your e-invoicing before the timeline which is specified, you can definitely go. There are two different mechanism available here. One is the pilot program where the government calls you and asks you to comply, invite you to the pilot program. And once you confirm, you are part of the program. Another is voluntary implementation that you can do once you appoint the ASP, you can start raising invoices accordingly. Across the globe, there are various countries where the soft mandate comes before and the mandatory comes later. And that is similar approach that the UAE has also adopted. The only benefits of going on a voluntary basis implementation is that you have enough time to test your systems, see if there are any discrepancies, any stoppages or pilferation in sharing of invoices, any issues that you are facing, so that you are fully compliant and do not fall in the administrative penalties of not complying with the e-invoicing. Then there are certain exclusions which are very specific to government entities which are running on a sovereign capacity and there is no competition in the private sector. There are airlines which are already using the electronic ticketing mechanism for international passenger transportation. In case of international transportation of goods, if there is airway bill, there is a grace period of 24 months for exclusion, and post that, it will be applicable to that industry as well. In case of industry which is into financial services and it is providing exempt services, then specifically this is also excluded from the scope itself. So this is not a temporary grace, but it is totally exempt until it comes into the mandate. And government may seem from time to time to introduce any other sector which becomes the part of the exclusion from the e-invoicing. Now let me take you through a few scenarios where it is clarified in case of what is applicable in the e-invoicing, what kind of invoicing is applicable. So a case where there are investment holding companies, and this will be very common in the UAE. So what happens that a holding company which is established only to function as a holding company, whether invoicing is applicable to them. So the guideline clarifies that if this investment holding company is only receiving a passive income, maybe because of the dividends from share or passive income from interest that has been lent, in that case you don't have to you have to comply with the e-invoicing. This is not applicable for those specific investment holding companies. However, if you are generating any other income from the active involvement, which is a business, maybe you are providing management services to your subsidiaries and raising a recharge invoice from them, in that case, invoicing would be applicable for such recharges. So the bottom line is that any kind of passive income, invoicing is not applicable. Where it becomes a business transaction, directly, indirectly, invoicing becomes applicable. Then there are scenario where, in case of a VAT group, there are intra-group transaction between the member group entities of a VAT group. In that case, there is a 2-year grace period which has been provided in the clarification or the guideline. The guideline mentions that starting 1st January 2027, there will be 2-year or a 24 months grace period. However, after the completion of this grace period, a full compliance for e-invoicing is still required. So this is provided for entities which currently may not be properly raising invoices, maybe using a debit note mechanism or a direct entry in the systems. So to bring them at par with the other invoices, this grace period is conveniently released for them. The important point to note here is that this grace period is available only for a UAE VAT group. However, if there are other groups such as a corporate tax group, or there are a transfer of capital asset or liability under a qualifying group relief, in that case this grace period is very much not available. So it is important to understand and distinguish between what transaction are there where the grace period is available and where it is not. The other clarification that brings is on a non-UAE established person. So before the guidelines, it was there that the invoicing will be applicable for the UAE businesses only. But now, even if you are a non-resident person, and not having any physical presence in the UAE, but you are still supplying goods or services in the UAE market, and you are required by the VAT law to raise a tax invoice in the UAE, in that case, you again have to come into the mandate and you have to comply with the e-invoicing. Lastly, in terms of administrative penalties, so from the effective date, which is the 1st January 2027 for the e-invoicing, in case there is a failure that you don't appoint ASP, which is 31st July for the first phase, you don't apply, then there is a penalty of 5,000 a month. Once the invoicing mandate is live and you you do not issue any invoicing or you do not issue a credit note saying that I'm not complying with, in that case there is a penalty on per invoice or a per credit note basis with a monthly cap of 85,000. There could be system failures while you are raising the invoice because it is prominently using a technology. It is okay to have technology failure or for a small time, but it is important that the business is notifying the FTA for the failure, and because of which the e-invoicing is hampered for a short duration. So in case you're not notifying the FTA, then there is again a per day penalty. The same goes to the recipient for its own system failure to not notify the FTA. And lastly, if your business is having any changes in the data, the registered business data, and if there is those changes are not updated in the ASP or the FTA, there are again per day charges. So if you see all the non-compliances and the failures for not complying with the e-invoicing falls on the business which is required to raise invoice. ASP is there as an aid to transmit your invoices. But at the end of the day, the onus and the responsibility is on the business to comply with the invoices. So thank you so much for hearing this. And I will like to pass it on to Bhakti, who will help us understand what are the various invoice types, which is the use cases, and what are the mandatory and optional fields which are required to be mentioned in the e-invoice.
Thank you, Prakriti. Good afternoon, everyone. So today I'd be taking up the data fields required for for an e-invoice to be compliant under the e-invoice regulation and the various use cases. So now, as you all must have heard, there are 51 mandatory data fields which an invoice is required to capture. So these 51 data fields existingly, maybe your invoices would be capturing either 20 or 25 invoices. What we need to do now is to identify what are the fields which are existingly there in the system. Maybe some fields out of the 51 may not be in your invoice templates, they could be in your masters. So we'll have to analyze what are the fields in the masters and the invoice template, compare it with the 51 data fields and identify the fields which are not in the system. So if you see from that, when we identify 15 of those fields could be those which are currently not required under the UAE VAT law, which are specific electronic e-invoice identifiers, or some would be those fields which can be configured at an ASP level. So we'll have to first identify, like for example, from 51, there are 20 fields in our system. So we'll get 31. From 31, we'll have to see what needs to be configured in our system. 2, what can be configured at an ASP level, or 3, what are the predefined lists. So I would like to give a few examples. For example, the payment due date. Today, the payment due date would be captured in your system, but we would be writing on the invoice like pay within net 30 days or net 60 days. When e-invoicing is implemented, that payment due date has to be a specific date, like 10th March 2026. So we will have to ensure that that change is done within the system. Then if you see invoice transaction type code. So invoice transaction type code is a predefined list which has a set of 7-8 types of transactions, whether it's a B2B transaction, export, RCM. Every transaction type is given a predefined code. So that code will have to be configured in the system. There could be scenarios wherein today in your system, the invoice already categorizes whether it's a B2B invoice or an export invoice. In that case, then we can suggest it as a configuration at an ASP level. ASP can pick up the details from the invoice. Like suppose if the invoice says it's an export invoice, ASP will pick that up as an export invoice and then link the predefined code to that category. Then the seller electronic address, that is defined as the TIN number, which is nothing but the first 10 digits of the TRN. Now, the question that arises is, in some instances, you must be exclusively into transactions which are outside the scope of VAT. So, you would not be currently having a TRN. For example, you're into third port shipments. In that case, what would happen is you would still be required to be registered under the corporate tax framework under the UAE regulation. So the corporate tax TRN, first 10 digits of that would be used as a seller electronic identifier address for the e-invoicing purposes. Then the seller electronic identifiers, that is like a predefined list. By default, the revised guideline has told that number will be 0235. So by default, for every user, that will be set as 0235, which is the UAE code. So that need not be configured in the system, that ASP can do at their end. Now, tax category coding. That is something which will be required under your system, because today your system does not say whether it's a taxable transaction or a zero rated transaction or an exempt transaction. While some places in SAP or Oracle, you would be having a tax coding category and the codes. So that coding will have to be now rechange to the e-invoicing coding. So tomorrow when you raise an invoice, the ASP can pull up the information exactly what kind of invoice category that is. So what requires to be done now is a detailed analysis of what are the fields, and where configuration is required, a discussion needs to be done with the ASP and the IT team to understand what sort of configuration can be done. Some places you would see instances wherein you cannot configure the fields in your system because of the limitation. Then that can be discussed with the ASP through connectors, that fields can be configured at the ASP level before they send the invoice to your customer or the FTA authorities. Now, if we think that there are only 51 fields which an invoice is required to capture, that is incorrect. An invoice, apart from mandatory fields, it is also required to capture certain conditional, mandatory and optional fields. If you see the metadata sheet provided to the ASPs by the authority, that has almost 94 to 100 fields which are required to be captured on an invoice. The mandatory are 51. Apart from that, there are certain conditional mandatory fields. Those are those fields basis the type of the transaction. Those fields would be either mandated, or if you do not have that transaction, then you would not be required to configure that field. For example, export. So if you're into a regular B2B supply, your invoice would have only 51 data fields. But if you're into exports, then your invoice, apart from 51 data fields, would also be required to capture the delivery country code, the shipping export document reference details, the specific code that this is an export transaction. Similarly, if it's a credit note, additionally, the reference to original invoice number would also be required to capture. Then, apart from conditional mandatory, there are a few optional data fields as well. These are optional. It is good to have, but not mandated. For example, if you want your invoices to capture the PO references or the contract references, then that can be captured. If there are any additional remarks like the bank details, which is generally captured in the invoice, those fields can be configured as an optional data field. So wherever are the fields which are existingly there in your system but not covered under the e-invoicing framework, we can still continue to have it as an optional data field, which can be discussed with the ASP, and the invoice template can be configured in those ways. Like previously I had discussed in the previous slide, there are a few predefined data fields. Like for invoice type, whether it's a tax invoice or credit note, there are codes given, like 388 is for a tax invoice, 381 is for a credit note. So if your ERP is capturing it as a tax invoice, then the ASP at their end will have to configure the code which is 388. So when the invoice goes to the FTA or the buyer, the buyer's ASP or the FTA can read what sort of document is being received. Then we have invoice categories, whether it's a standard rated, reverse charge, zero rate, we have the categories predefined. Similarly, payment means whether it's for bank transfer, cash, credit card, they are codes. So all of these codes, there are two options: whether we can configure it in the SAP or your existing ERP system, if that's allowed, or else second alternative, it can be done at the ASP level. For that, ASP discussions will have to happen till the set of configuration the ASP can do. Now, mainly the type of documents which are there under the e-invoicing are two types. One is the tax invoice, one is the commercial invoice. Tax invoice mainly would cover all of those fields which are currently covered under the existing VAT framework. So, which is domestic B2B supplies, or the reverse charge mechanism, or the export transactions, or the zero rated transactions. Commercial invoices are those which are currently not covered under the e-invoice framework, and only which are not covered under the VAT framework, but the e-invoice still covers. These are the out of scope supplies or the exempt transactions. For example, the third port shipment, or if you're into only interest or leasing, which is a exempt transaction, or you're into subsequent sale of residential units, which is currently exempted, then but still you would be required to generate commercial invoices, or it's within intra group transactions. So today, what would be there is, for commercial invoice, you would not have a TRN, VAT TRN. But in case you have a corporate tax TRN, then your corporate tax TRN would act as your identifier for e-invoicing purpose. But even if you're not registered under the corporate tax TRN, then you would be required to register with the FTA for e-invoicing purposes, and a specific e-invoicing TIN would be issued to you. Now, here one question arises. Suppose you're in a VAT group, and in a VAT group, there are 4-5 entities. So, which TRN should be used for the purpose of e-invoicing? Whether the TRN of the VAT group is to be used, or the entity-wise TRN is to be used. Here, it is clearly clarified that it will be at entity level. So every entity level, you would have to identify, you would have an existing TRN. That TRN would act as your identifier for e-invoicing purposes. Here, also one more thing we would like to clarify is, today e-invoicing is being implemented in a phase manner. Not everyone would come under the purview of e-invoicing in the phase one. There would be instances wherein you as a supplier are into the e-invoicing framework because your turnover is more than 50 million, but your buyer's turnover is less than 50 million, and they would not be into the e-invoicing framework. So there would be a dual invoicing concept. That is, you would generate an e-invoice. Your e-invoice would be sent to the FTA, but it would not be sent to the buyer's ASP, because they are not required to appoint an ASP today. So to the buyer, you would still have to send the invoice through the traditional PDF mechanism or the existing email mechanism which you are following. As and when they come into the e-invoicing framework, then the invoicing would be directly sent through the ASP. So here we have put a sample template of how the e-invoicing would look. This mainly captures all the 51 data fields which are prescribed by the authority, but it is not mandatory that your invoice also is in the same format, or all 51 data fields of the invoice are on your invoice or the face of the invoice. Your invoice could continue in your same existing format, and these 51 data fields could be set up at the back end. What is required is, from your ERP system, these fields should go to the SAP, to the ASP system, but it need not be on the face of invoice. You can still continue to have the invoice at your own format. So now we have spoken about the data fields, the mandatory, the conditional mandatory, and optional fields. But now, how would you know what are the conditional mandatory fields which are applicable to you? That is based on the use cases. If you see, there are 16 use cases which are prescribed in which an e-invoicing is required to generate. Based on the e-invoicing, your mandatory fields will change. Like for export, you will have maybe 60 data fields which are mandated. For reverse charge, you will have 55 data fields and not 51. What is important is, from these 16 data fields, today you identify what all are the transactions applicable to your businesses. Based on the transaction type, then an invoice template will have to be generated for each type of category of invoice, because the number of fields from transaction to transaction would vary. If that proper segregation between transactions is not done, tomorrow when e-invoicing is implemented, what would happen is you are required to generate an export invoice, but by default you generate a B2B standard invoice, then that will not have the fields which are required for export. So that invoice will have to again be cancelled through a credit note, and again the export data fields will have to be configured, and you'll have to re-raise a fresh e-invoice basis the fields required for export. So identification of which transaction is required to your business is very critical today. Here we have tried putting a few examples of how would the invoices look before and after the e-invoicing regulation. For example, exports. Today, you just have it as a zero rated invoice and you mention the nature of service and the value in USD or the currency in which you're billing. Tomorrow, specifically, the invoice type would have to be selected as an export from the category coding. The country destination code would be have to selected from the predefined data list, and the shipment reference details would have to be configured on the face of the invoice. Then credit note. Here there is one clarification. Earlier there was no clarity whether one credit note can be raised against multiple invoices or not, which is allowed today under the VAT regime. In the revised guideline, it is clarified that you can raise one invoices against multiple e-invoices which are raised previously. Again, in case of credit note, a specific category which is 381 will have to be configured into ERP to note this is a credit note. The reference to the original invoice number would be provided. One more thing which is required is earlier, even if whenever we were sending the invoices to our customers, maybe due to certain reasons they missed accounting for the invoices, they would come back to us and say, can you please cancel the invoice and give us a fresh invoice dated today for the purposes of availing input VAT. But tomorrow, from a predefined reasons for raising the credit note, the reason will have to be selected, that is whether there's a discrepancy in the value or there's a discrepancy in the service provided or the goods supplied, and from the predefined whatever is the category selected mandated, then the credit note would be generated. Now reverse charge, here there is a clarity that similar to the clarification which is provided under the VAT regulation, that there is no self-billing required for import of services. Similarly, the e-invoicing revised guideline has clarified that no reverse charge mechanism self-invoice is required in case of import of goods and services. This would be applicable only in case of domestic reverse charge instances, which is in case of oil and scrap industries. So now the invoice will have to clearly mention that this is the invoice raised under reverse charge mechanism, and the buyer's CRN, if it's registered, will have to be captured. One more clarification which has come is today the HSN and the SAC code, which is mandated to be included under e-invoicing, is kept on hold for a period of 2 years, and then will again be revisited, and they'll provide a date from when it will be mandated. So today the type of good or services from the list of predefined is not to be selected, but down the line that would also be mandated under the e-invoicing regulation. So what is important now is we start identifying today what are the gaps, because configuring that in the ERP will take lot of time, and also discussing with the ASP of the fields which are to be configured at the ASP level, further integrating it with the system and doing a pilot run. That is critical to ensure that on 1st Jan 2027 we do not see any hiccups. Now my colleague Manish will take you through the approach in which we can take up the e-invoicing implementations. Over to you, Manish.
Thank you, Bhakti, to taking us through the data field, identifying and assessing the gap, which is very important to understand what are those fields which goes into the e-invoicing structure, and that would require a system changes. So that's what I'm going to talk about. The overall readiness. Now we understand that what is applicability and what are the system changes or the structural changes would be required in your process or the systems, and what we need to do now. So, as part of adopting this e-invoicing, as every business need to understand, as Prakriti was highlighting, that there is a timeline defined to it. But yes, we may see the timeline in phase manner for 31st July for above 30, above 50 million. and less than that there's a next year timeline. But we need to be ready of with all this because it would require for you to prepare. I know that prepare readiness will be taking time. So understanding the applicability, as we understand, this is applicable for business to business and your business to government transactions. But we need to know even for your out of scope transactions, it would be still applicable, though it would be under business to business. So your out of scope, like a third post shipment, which Bhakti was mentioning, you need to have that E-invoicing would be because you would be raising your invoice, which has to through the E-invoicing system. But your vendor who is supplying you, like if you are supplying from Singapore to maybe Saudi, the transactions are not routing it through UAE. The transaction still has to be routed through the E-invoicing. So you have to raise an invoice from for your sales invoice billing to the Saudi, but your supplier would be sending it from Singapore to Saudi, which will not be reported through the e-invoicing structure. Your sales will be reported, but your input will not be reported. And similarly, we can look for example of exempt supplies. Now, exempt supplies could be in the your real estate for residential business, which is basically for business to consumer. So in that scenario, you will not be generating an e-invoicing, so that will not be applicable to that. But in case of the property management businesses, they would have some commercial business, so commercial properties as well. So they would have some portion in the residence, some portion in the commercial. So you need to assess the applicability would be there because for your commercial rental businesses, because that is a B2B business, and that would be the e-invoicing would be applicable to those rental billing done. Okay, and also maybe as Prakati highlighted with respect to the investment business. Now, investments holding company who are only doing an investment in the other companies, they are not operating businesses. In that scenario, e-invoicing will not be applicable. But if they are providing management services, support services, we see that's a common structure in UAE where they are providing this management support services. So the CEO or the management sitting in the investment company, they provide the support services. For that, invoicing would be applicable. So all these scenarios, your current business need to assess what are the transactions which you have, whether you will be applicable, invoicing would be applicable to your business or not. That need to be assessed in the first stage, and then looking around the current systems and processes, in terms of what systems currently are using it, understanding the different use cases of e-invoicing which Bhakti was mentioning, understanding there are 51 data fields, but beside the 51 data fields there would be additional data required, additional data field required. So is your system currently capable to capture those data? I mean, you need to configure your systems to capture those additional data fields. So your ASP will come and integrate the system, right? Or if the technology provider can support you in the data fields, but you need to assess what are those additional fields required because ASP only can provide the technical support, but as part of your readiness, you need to see list down what are the applicable, what are like in which scenarios you have exports invoices, what are your self billing invoices, what are the scenarios of your credit notes happening around, because those require additional fields to be captured. So you need to assess that requirement, and then once you assess that requirement, you need to do the performing a gap analysis that what is currently being captured, what is not captured, because you need to configure that field, those changes has to be done, as well as you need to collate the data, as we mentioned about having the TRN number or additional fields which has to be coordinated from your customer, from your vendor, which would take time, coordinating those informations, updating it, because if those data are not correctly updated once your systems goes live, because the data are not correct, the ASP will reject that invoicing, and this will delay your whole operation cycle. And before go it goes live, you need to test all this, so you need to have the informations beforehand to be updated in your masters or vendor, customer, or the transactions which you are generating to be updated, so that it will be only assessed when you do a gap analysis of what is currently available, what is additionally required as per the e-invoicing framework. Then you go and choose your ASP, because once you understand your system, the structure, which ASP can support in that particular system, or then you go and identify who would be best suitable for your business. And then another one of the critical method, the integration method, it could be on real-time basis, okay, where it is a if you are using Dynamics or Oracle or SAP or any other system, you want to have real-time integration. That is one of the method of integration by the ASP, or probably it could be your batch basis. You can do it on weekly basis or daily basis, depending upon the volume of transaction you have, or you want to do it manual. So you don't integrate your system, but you the ASP will provide you that particular format. You provide the information, and they upload it. So based on the business transaction, the natures, you need to assess which method of integration would be required, because accordingly, then ASP will proceed to look around to analyze the systems and do that workflow validation integration, because they will also take their own time to assess, to run the testing, validate different scenarios, and to see if the data is correctly flowing in or not. And also one of the critical aspect becomes so that because of the system invoice validation process has to be relooked, because once you raise an invoice from the e-invoice platform, you cannot do a changes later on, and there could be rejections because of the commercial reasons. And specifically when we see in the contracting business, where we raise an invoice and later on, because of the commercial terms and conditions are not being fulfilled, your customer may hold the invoice, and then they need to ask for changes to it. And since there is a timeline up to which, like 14 days, they need to accept and clear the invoice. So if that happens, then there will be a lot of credit note being, scenarios being developed, and it has to be created in the system, which will again delay the whole operation cycle. So the internal validation, the workflow should be created, that there is a proper validation before the actual invoice is generated from the e-invoicing platform. And then, of course, the technology implementation will be assessed by the ASP provider, and they would do the test run, and then finally go live. So, which would involve, in terms of understanding the readiness by the people who are the users of that. Your operations team, your finance team, they need to be ready with that system implementation, and they need to give the training. They need to be given the training, and the guidelines need to be documented for that. So as I was mentioning, understanding those data fields requirement, which is a part of the gap analysis, what is applicable to your system. Understanding the second is system configuration to make those changes, updating the data, defining those data fields has to be done. Then having a KYC, because currently even today we see that even the TRN number is not correctly updated. Okay, so that you need to see later on. Those data has to be on real time, being updated. If there is any change in the TRN number, or if there is any change in the address of your uh, customer or buyer, that has to be updated in the system on time to time basis. And finally, before all you go for ASP, this all has to be updated, and then ASP will come and look around the system. The weight has to be integrated, and he will do his own testing before it goes live. So we have just selected few scenarios of which we would have pointed in earlier discussion as well. So in case of like export of goods or services, which most of our businesses would be doing. So in that scenario, how the invoicing structure will look like. So as we understand the five corner model, your supplier who's going to generate an invoice through the invoicing platform, C1 will be validated by an ASP in the case of export of goods or services. But there is no buyer sitting in UAE, because it is outside the PayPal network. So in that scenario, it will not be going through your C3 or C4. It will be your ASP will be transmitting that data directly to the FTA. So while you would still generate your regular invoice or PDF, or to continue to send to your buyer who could be sitting in Singapore or Saudi, because they are not in the PayPal network, though Saudi has e-invoicing platform, but that is not through PayPal. So you would send your normal invoice to Saudi or Singapore, who are not in the PayPal network, through the PDF what we are currently doing in. Now, in case of RCM, what happens in case of RCM? So in case of RCM, the e-invoicing platform is not required, because your supplier who's supplying it from maybe Singapore to UAE, the services or goods, they are not on the e-invoicing platform of PayPal network. In that scenario, it has to come through a normal RCM VAT reporting, what we are currently doing it. So we'll be reporting it in the VAT return, and then and we will be counting in our normal ERP system. So it will not be routed through the e-invoicing platform. Now, as I was mentioning, with respect to the self-invoicing, Self-invoicing would be only as per the VAT regulation wherever they have mentioned, primarily with respect to the commission settlement or with your unregistered seller, or could be a scrap purchase from you're doing it and they're not registered, they don't have a legal invoicing structure. So then you need to a buyer in this scenario need to agree with the with your supplier that they would be raising, the buyer would be raising a self-invoicing. There has to be agreement proper in that. And then, as Bhakti was mentioning, in case of self-invoicing, the data fields requirement, you need to ensure those extra data fields are captured when you are generating the invoice, that you need to understand and need to be created in the system. So the buyer will be creating the C4, will be creating the self-invoice that will be validated by the ASP, and that data will flow to the tax authority, the C5. And as I was referring to the third post shipment, purchase and sell. So now in this scenario, when you are buying it from Singapore, you that buying is not reported to the e-invoice because the Singapore supplier is not in that platform of PayPal here in UAE. Then in that scenario, you would be reporting it normally through your normal RCM basis of VAT reporting in your return. While when you are generating an invoice to Saudi from here to UAE to Saudi, then you will be reporting that through it's like a normal, the first scenario of export goods and services. It will be reported through the normal export of goods services and an e-invoicing channel. Now, in cases where though your buyer could be in UAE, but he might not be reaching the threshold currently defined of 50 million. So he might not be in the e-invoicing platform. So what happens in that scenario is that though like your business, which is dealing into you are dealing into a good supply, buying it from the local supplier in the UAE. From Sharjah, you're buying it and you're selling, you are a seller set in Dubai mainland. So we're buying it from Sharjah. So your supplier is below the 50 million threshold. So you will be reporting that invoices of purchases through the normal transaction route as we are currently doing it. It will not be reported through the e-invoicing platform, but your outward sales to a customer, because you are crossing threshold of 50 million, will be reported through that e-invoicing platform. So this all will require where, because part of the data is coming through the e-invoicing channel, whereas portion of your input which are not registered currently in the e-invoicing it will be not through the e-invoicing platform. So you will have to do a reconciliation. A VAT reconciliation become a prima facie important to be carried out. That what has been reported under the VAT under e-invoicing platform, because the data is getting stored, is getting reported to the tax authority FTA, while the portion which is not through the invoicing is not getting reported to the FTA. So when you submit your return, maybe you have an input of 50,000, which you purchase it through the one who is not registered in the invoicing. So that reconciliation has to be carried out between what is reported through e-invoicing and what is reporting without outside the e-invoicing when you submit a return. So some of the challenges we discussed about, while I was presenting the other slides. Now, this summarizing what are the key challenges, as the invoices cannot be cancelled once you generate an invoice, and then if there are any changes which your construction company, or your contractor has rejected for whatever commercial reason, though it has passed through your ASP because you have all the data fields being captured, but because of the commercial reasons it might be rejected, then you need to have a credit note being raised. Suppose if you have raised an invoice for maybe 100,000, out of that, say your customer has rejected for 20,000, that you need to create a credit note for 20,000. So that will delay the whole process, and then again the approval system will flow through reporting through e-invoicing platform, and those data field has to be captured. So before, you need to have that validation done before the invoice is generated to the e-invoicing to avoid these scenarios, because it will ultimately affect your operations delays. Then, because of the datas are not being captured correctly, or the information are not captured in terms of TRN is not updated, the address is not updated, then this will be rejected by your ASP. So regularly it has to be updated on real-time basis. And in the scenarios where we have multiple ERP, specifically for the retail business, where they have point of sale system is a different ERP, and your accounting is a separate ERP, your operation is a separate ERP. So where you will have that multiple ERPs, then the integration between all those ERP become critical when you come into e-invoicing platform. So that consistency has to be looked into. And overall, from the governance perspective, it is not the only responsibility of your tax team or accounting team or IT team, but even the operations team. They need to be involved because they are the one who are front end liaising with your vendors or customers, and they give you the requirement. They because due to month end pressure of billing, they would pressurize you to generate invoice. But if the informations are not correctly captured, validated, then this will lead to a lot of rejections to be created. So your operations to be team need to be well groomed, aware about what is the requirement from the data field for the invoicing and what are the validation to be done before invoice is generated. So they need to be trained about it. And as I was referring to, in terms of reconciliations, because portion of your information coming from your supplier who is not yet registered on the invoicing platform because of the threshold of less than 50 million, or your supplier outside UAE not part of the invoicing, will be manual data coming in while some portion going through your invoicing. So the reconciliation has to be done because your VAT report return will come include both your non-registered invoicing, supplier customer, or your certain e-invoicing registered supplier customer. So that reconciliation has to be done, and also in terms of archiving the data, the security which has to be carried out, the having data validation and data integrities need to be looked into. So how do you actually, plan it? I mean, you need to plan early. I mean, to now we are in the mid of March. We have only 3 months left out, to go live by July. And so, you need to start working around or start looking around what are the current systems you are having in, what are those applicability to your business scenario, specifically the data fields requirement, and then understand you start involving your operation team, IT team, accounts team to be part of the structure, understanding, discussion requirement, because they are the one who will come out with the operational challenges. Even the IT team will come out with the operational challenges when they work upon it. So it's better to brief all of them and make them understand so that those operational scenarios or challenges being identified and being addressed on timely manner before you go and actually find and select the ASP. And then the pilot run program has to be done. Once the ASP is selected, he does the integration and then he will do this pilot program. So it's good to do a pilot run beforehand, so that any kind of hiccups which are coming in through this particular flow of invoicing is identified and addressed. So these are some of the global customers which our Taxila, the ASP partner, has been working upon on the e-invoicing in different jurisdiction, worked in the Saudi region and other regions across globally, and they have been doing it for last 10 years. So now to summarize, the key takeaway of what we presented today is understanding the requirement through the process assessment. When you do a process assessment, then you go and look around what is the applicability, what current structure of invoicing we are following today, and what those gaps are, fill it up, and those changes which are required in the IT system. You need to look around those systems requirement. Then you go and identify your ASP partner, and then that integration will be done by the ASP partner, and then you look around of post implementation support, because that plays a very critical role, as Prakati was referring to. Once your system is live and if there are any challenges coming in, then that need to be taken care of well, and that ASP does that, and he need to be so aware about what could be possible challenges coming around and how that need to be addressed, because there's a certain timeline within which it has to be addressed, unless otherwise it will result in a penalties if you don't get into the compliance support immediately. So yeah, that's basically from our side. We are open to questions. No, whoever has anything, let's discuss the queries, what you have in your mind. So anyone, please drop your questions, queries, which you come across or you have, while you are reading the law or you have in discussion with your operations team or accounts team.
Manish, currently there are no questions in the chat box.
Yeah, so I think just to keep key highlights, key critical points to know is VAT grouping. As we see that there are a lot of VAT grouping structure could be there in the existing economy or the business scenarios which we have in UAE. So as Prakriti was highlighting that it is now within the VAT group. If you have, there has to be separate endpoint, but it is temporary relaxation which is given for 24 months. That need not be through the invoicing because it complicates the business. There will be multiple, like, what we do is we do a lot of support services billing within the group. Your HR account sitting in one business, and they are billing internally. That internal billing for internal billing purpose as of now, it won't be applicable, but yes, after 24 months timeline it would apply to those businesses. And other could be from the perspective of your knowing that whether you have out of scope exempt businesses, uh, even those are exempt out of scope businesses, you would still apply. The invoicing would be still applying to the business scenarios. If it is B2B businesses, they need to apply. They need to register and make sure that your data details in the MR tax portal is correctly updated, and you look around for data fields which are applicable to your business in terms of what Bhakti was mentioning, that you need to assess the transaction scenarios, whether you have exports businesses or you have RCM or you are issuing credit note. What are those additional data fields required? That is something you need to look around, and looking around your current system structure, gap analysis, and work around, what are those gaps which you need to look around and structure your system, and then identify your ASP partner, and then work, and then go into the integration for those with ASP. So we don't have questions, I think, uh, but it's still, our details are mentioned in this. You can drop a email to us, contact us if anything specific queries comes up to you later on. We are happy to address that. So thank you all for being a wonderful audience listening to us, and we will be sharing this recording of this webinar so that you can later on again watch it and get into detail of the particular compliances.